In this video, we're going to be discussing a reversal strategy called the Extreme Bollinger Band Bounce. And realistically, the aim of this strategy is simply to trade in reverse direction from the prices hitting the inside of the top Bollinger Band or the price hitting the inside of the bottom Bollinger Band. So this is a total reverse strategy, but it is made a lot more simpler by using Bollinger Bands, because without them it can be very, very difficult to trade reversals, more or less impossible really. But once we use Bollinger Bands, it becomes so much more simpler. As long as you follow the rules, you will be able to make a profit from trading this strategy. So the first thing I need you to do, please, is load up Bollinger Bands onto your trading screen and make sure that of two things. Number one, make sure that the period is set at 20 and that deviation period is set at 2. This is standard, I think, in a lot of trading software, so you shouldn't have a trouble doing that. Also, I need you to load up a 10-period exponential moving average. Make sure that it is exponential, not any other kind. And also, you need to load up RSI, which is the relative strength index, and the period for that needs to be 10. So RSI period 10, and apply everything to close, which I think should be quite standard anyway. So the aim of the reversal strategy on Bollinger Band, or extreme Bollinger Band reversals, is to play a bounce in areas such as this. As you can see here, you've got a bounce here and it's gone up to the 10-period moving average. You've got a bounce here, it's gone up to the 10-period moving average. You've also got another bounce here and it's gone up to the 10-period moving average. There's also another one there and another one there. In fact, we're going to pick this one here. But the aim of this strategy is to trade a reversal from the point, or looking rather, to get into a position that trades back in the opposite direction from the current trend once the price hits or goes over the Bollinger Band. That's what is called extreme Bollinger Band reversal, because a lot of the time it goes over the Bollinger Bands, but then it gets sucked back into it and reverses back into the opposite trend. So if I just mark this up here, this is the candle that we're going to focus on if I move it. You see this candle here. I'm just going to zoom in actually to make it a little bit easier. This candle here, okay, you can see that the price has blatantly hit the bottom Bollinger Band, so I'm just going to mark it up. So what we're looking to do, as I said, is to generate a trade or enter a trade where we have a profit target up to the 10 EMA. Now that, if I just mark that up with a line there, okay, it's usually best just to put the profit target a little bit below the 10 EMA, just so you're not too greedy. And yeah, so that's what you mark up. So what we're looking to do, once we see that the price has bounced, is starting to approach, or has approached rather, the bottom Bollinger Band, we're looking to go into the M30 time frame and see whether it's done the same thing. And yes, it has. Okay, and that's what we're looking for here. The M15, not quite there, but it has here. Okay, so we move it one across. Remember, at this stage, we don't know what any of these candles actually are. So at the moment, we're waiting for the M15 candle to hit the bottom Bollinger Band, and that's what it's done. Okay, now we're looking in it. Now we have to drill down to the M5. Okay, now the M5 period is probably the most important period if you trade in H1. H1 or the hourly time frame and M5 time frame go very, very well together. Okay, so a company with Bollinger Bands playing this strategy can be very, very profitable, and I'll show you exactly how that is. What you can see here now, as you can see, obviously the prices in the M5 time period have all pretty much hit the bottom Bollinger Band, okay, and that's great. Okay, so now we can just move that out of the way. But what you can see is that the lows that the market is making there's sort of a low there, another low there, and another low there. They're the ones that you have to take pay attention to. And what we're looking for here are two things. We're looking for divergence between the lower lows and the RSI. Okay, so as you can see here, we've got lows being made in the downwards direction. Okay, and at the same time we also got lows being made in the RSI. Okay, now what we're looking for is this divergence. The last two lows that you can see here, so this would be low number 1 there. Okay, I'm just going to mark them up for you so it makes more sense, and low number 2 there. Okay, those lows you can see are represented in RSI with divergence. So by that, what I mean is, if we just delete those lines, that even though there's a lower low here and a lower low there, we have a low in RSI and a higher low in RSI as well. So the lows in RSI are going in the opposite direction. Okay, so that's sign number 1. Okay, that we've got divergence in the market. Okay, and what we're also looking for in the M5 chart is for the bottom Bollinger Band to be to curl back upwards, either to be flat or start curling upwards. Okay, and we get that here. Okay, we get that there. So we've got two things here. We've got all prices now hitting the bottom the bottom Bollinger Band. We also got two last lows in M5 correlated with higher lows in RSI, which means there's divergence taking place. And now we need that curl, and that curl occurs just there. Okay, you can see that, this little area. So what we're looking for is a new high, a new higher low in M5 to enter the trade, right? So we've got, let's have a look. It starts flattening out around about here, I would say. So we've got a lower low there and a higher low there. So that means that we get into this trade round about there. And the only thing you need to do then is go into M1, make sure, I'm going to have to zoom out here, I think. Make sure that the opposite trend line, which you can see here from the reverse trend, has been broken, which it has. You can see here we've got the new low in M5 taking place, and we can literally enter that trade round about there. Okay, and our stop loss is just a few pips below the low where we started. Okay, so if I just get rid of all these lines to make it easier for you, so we've got our entry is round about there. We've got to go back to H1. Our target is there. Okay, and the amount of pips we made here would be 5.9 or 59 if you're using a 5 decimal broker. So that's it. All you're really looking for is that is for all the time frames to hit the bottom Bollinger Band. In M5 you're looking for divergence with the lower lows, and you're looking for a new high to be made in M5 after the divergence. And M1, which you're just using for your entry, you make sure that